Hey, Bryce here. Welcome to the Bookkeeping Business Secrets podcast. In today's episode, we're going to talk about where to find accounting clients. We're also going to talk about a couple of different rookie mistakes that go along with where to find accounting clients. We're also going to talk about some business lessons I've learned along the way that helped cemented this information for me. Maybe it can be helpful for you as well. Also, if you haven't already, go check out the description of this video, or if you're watching on like a podcast, go check out like the podcast description so that you can get some more information on like our different mentorship programs, as well as different other helpful episodes and tutorials to help grow your accounting or bookkeeping business. Now, we designed this podcast to help accountants and bookkeepers and individuals looking to get into the accounting field start a business, grow, and be able to support their families with the income that comes from their business. So in today's episode, we're going to talk about like where to find accounting clients. Now, the reason why it's important to know this is because without getting clients, it's very hard for you to run a business, right? You can't run a business if no one's paying you money. And there's a lot of different, philosophies, thought processes, and teaching that are kind of going around the market, which some of them are very helpful, some of them are a little bit not so helpful. And I've tried so many different aspects when I was starting my firm. So I started my firm back in 2015. It took me a little while to kind of hit my stride. Like the first 6 months, like I just didn't know what I was doing. Like I didn't understand how to do consultation calls. I didn't understand how to go and get good leads. I didn't understand really how to convince people to work with me. So it was very hard in the first 6 months, right? And I watched like a bunch of, I saw a lot of people talking in like forums. I saw people talking on like Facebook groups about like different things that we're trying, like Upwork, Bark, Thumbtack, Craigslist, and none of those really worked for me, right? So I had to really learn this stuff, and like the way that I learned this stuff was by like investing in like different like courses. So like in the first after the first 6 months, I went back to work for about 8 months. Within those 8 months, I was like just buying courses. I spent like $35K on like courses. And it paid off, right? By the 14th month, I got to about $15K a month in like sales for like bookkeeping and CFO services. So I mean, it was well worth it, even though it was like a lot of money at the time. And it's just one of those things that I've just kind of like noticed, like people that succeed, they generally tend to just like keep investing in themselves like as much as possible, as much as they possibly can. And you know, that's just what it takes in this game, right? That's all it takes. Just keep investing until you kind of like figure out like both the things like what to do as well as what not to do, and then you'll be able to kind of keep growing. So where to find accounting clients? Number one is all about understanding what's called a conversion circle. So imagine a conversion circle kind of like a pizza pie, right? So for some people, they have like a personal pizza, and like the personal pizza will be like representative of like your friends and family, right? And it's like, okay, you can feed yourself maybe like one or two like clients, maybe it'll like feed you for like one meal, but it's very hard to kind of like maximize that. You can't share that with anybody, right? But as you expand that, maybe bake a bigger pizza, like maybe go to like the store and you buy like one of those like Tony's Pizza. That was a big one when I was growing up, Tony's Pizza. You literally just like stick in the oven. It was so good when I was a kid. It was so good. I don't know if it's like compared like if I tried it now as an adult, I don't know if I would still like it, but when I was a kid, it was like greasy, it was cheesy, and I just loved it. But it's a little bit bigger, right? So now you can do a little bit more. But then let's say you actually want to go and like host a party and you need a pizza that can like serve like 10 people. Okay, well you have to go to like a restaurant like an Uno's Pizza or like a CC's Pizza Kitchen, and you get a huge deep dish with like 20 slices. Each of them are like this thick, right? You have a lot more that can go around. You can eat for a lot longer. If you want to just be one person that ate off that, you could probably eat off that thing for at least like a good 10 days if it didn't spoil, you know what I mean? So it's the same thing with your business. When you first get started, like you generally have like a personal sized pizza, right? It's your personal network. It's people maybe you've gone to work with, maybe you grew up with, maybe you went to school with. Maybe they're in like if you're like in a sports league, like if you play like softball or whatever, right? Generally those are people who are around you. It's a very small circle. So your goal when it comes to starting a business is all about learning how to expand that as much as possible, because you can only sell within that circle. So if you only have 10 people in your initial personal circle, once you've talked to all 10 of those people, you're essentially out of luck. right? If you go 0 out of 10, okay, well, you got no clients. If you go 1 out of 10, you only got the one client, right? So it's like you kind of like run out of steam. So you have to constantly expand and then you convert. Expand, convert, expand, convert. Now, for me, one place that I really like to go is I like thinking about LinkedIn. Now, I like LinkedIn because it gives you access to not only the people, right, but it gives you access to information about those people. The problem with like a social network like Twitter, Facebook, Instagram is not that there are not good quality business owners on those platforms. It's just you cannot really tell who's a quality business owner in a lot of cases just by looking at their profile. Some people, like, they have like no picture on their profile, they have no pictures of their business, they might just have like pictures like their kids, right? So you don't know. But when you're on LinkedIn, there are search criteria as well as research tools that show you information about their business, like who's working for the business, how many employees, how many contractors, do they have someone that also does the same service that you offer. Also, you can see their revenue. So you can even see, like, are they even like big enough for you to actually like start working with them, right? And that kind of slides into the next point, which is like niching, right? So niching. So there's a couple different ways you can niche. You can niche by industry, you can niche by business owner personality, you can niche by revenue size, you can niche down based on propensity to spend money. So what do I mean by that? So propensity to spend money. There are certain industries that are more apt to overspending for services, contractors, and employees than other industries. So what's a good example of that, right? So a good example of that would be something like a solar company. So in solar, like, there's a lot of social media tools out there that can automate LinkedIn. There's tools for $90, there's tools for $500. On average, the solar companies are going to opt in for the $500 per month tool instead of the $97 per month tool. And the reason why is because they generally tend to be very, very strong in sales. So if you think about it, for a regular person, if you're not very good at sales and like you have like a fixed income, you see money as like, in a lot of cases, like you have to protect it. You don't want to overspend. You're basically playing on the expense side, right? So everything's about the expenses. But when you get good at sales and you have your own business and you can effectively walk up to a person and get them to give you, let's say minimum $500 a month, that's $6,000 a year for basic bookkeeping services. If every person you speak to has the potential to give you $6,000, you start seeing money differently, right? You're playing on the income side, right? So the expense side can it can vary and it can go like really high. So most people that are really good at sales generally tend to be bad at either saving or conserving because they're so focused on bringing money in. It's a very kind of interesting phenomenon, right? So you can actually target industries that you know are better at sales and have very, very high ticket items because they're more likely to pay you a higher fee, right? So even then, like, even taking a step deeper, another way you can even think about niching down would be going after industries that have either high revenue or high growth capabilities, right? Whenever I think of a high growth capability, I'm thinking of like a company that can get some sort of either government funding, grants, donation, some sort of cash injection that can take it from a beginner, like fledgling business to, a $2 million per year business right away. A good example is nonprofits. Good example of that is tech startups when they're like raising different rounds of capital. So A round, B round, C round, angel investments, etc., right? Another example can be like cannabis companies, right? Where they're going to get some sort of cash infusion or donation, so now they should grow so much faster, so their budget actually grows a lot faster. Now, this is not for all the companies, I understand. There's going to be some nonprofits that have $0 in their account. There's some nonprofits going to have like $10 billion in their account, right? There's extremes in every single industry. I'm just telling you what to look for on average, so when you actually come in contact with those people, you can recognize it faster. This is really, like, all of this business is, like online business and just business in general, is all about pattern recognition. If you can recognize a pattern, you just keep doing that pattern until it stops giving you money. And the funny thing is, most patterns that you think are gonna stop don't stop. Like I used to have this thing where it's like there's gonna come a time to where I can't get any clients, and like 10 years later, it's like, oh. I didn't think this was alive for 10 years, you know what I mean? But it's just like, and I'll probably be sitting here like 10 years from now saying the exact same thing. Talk about, oh, I thought this thing was going to end like 15 years ago. But the pattern keeps staying there. That's the beauty of like business, man, is like everything in this business is front loaded. You either figure it out in the first like 6 months to a year, and then you just keep doing it forever, or you quit, right? If you think about like think about most CPA firms that you know, like they're like 40, 50 years old. It's because like once you get it down, you just keep doing the same thing every like, dude, my day is amazing. I check with my contractors, see if there's any new like either client questions, client work, if any things have like blown up, if maybe the bank feeds are not like, I just check that. And I film like a YouTube video, I go to the gym, I come back, I like talk to mentorship students, and then it's just like, I go check with my contractors again, see if there's any consultation calls on the calendar, or if my controller for my accounting firm needs either some help closing another deal, or if she's already handled the deal, that's it. And then she's basically working the contractors all throughout the day, and I'm free to kind of do whatever I want to do, right? Now, it didn't start like that. It took a long time to get to that point, right? But once you're there, you're there. So I can literally, like, I was just sitting there earlier on today. Excuse me. I still have this, it hurt. I have this, it's almost over, this cough that I got when I got off the plane home from Miami. So when I was at Miami, I went on vacation probably like last week, the week before the 4th of July. And like when I was in the trip, I was fine. It was like the last day of the trip, I felt my throat kind of like, there was an acute moment where I felt something in my throat. After that, I got super sick. I had like a fever for like 2 or 3 days. Now it's just kind of like a lingering like cough, like my bronchial tubes are still a bit kind of triggered. But it's all good. It's almost done. But yeah, I was like sitting there, man. It's just like, I could run this thing for like the next like 10 years. Like I still get time to go and like relax, go to dance competitions, spend time with family, go out to dinner. I went out to dinner like 2 or 3 times in the last like week, which it's great for social life and just great for life. Terrible for diet, right? I'm trying to lose weight and like I was on a huge downward path, and then now, you know, I am losing weight still. It's just not quite as much. So it's been a little bit annoying or whatever, but you know, it's been a great summer so far. I'll just say that it's been a great summer. So back to what we're saying. Next thing. So in addition to looking for companies that have like a high cash infusion, you can also look for companies that have a higher revenue, right? Because transactional volume tends to follow revenue in most cases. Not in every case, because there are certain businesses that can like sell one thing for like $200,000, or they get like one contract for like $1 million, right? So they can be very, very high revenue, but not necessarily, they might necessarily have 10 employees or 10 contractors, right? It just kind of depends on them. Versus you have an e-commerce company that's doing like 100,000 a year that has like 1 million transactions, you know what I mean? So in a lot of cases, revenue is going, or transactional value and volume is going to follow the revenue. So if you go to companies like construction tends to pay more money because they generally operate at a higher revenue, and they're used to operating at a lower profit margin. Why is that important for us? Okay, because you never want to be the person's like first contractor. So if you think about it, right, who are the people that are the hardest to sell? It's the people that have never spent money before, because they're not used to spending money. Right? They don't like spending money. They're not used to spending money. They've never hired a contractor before. They're not used to giving up control. Versus who are the easiest people to sell? People that don't mind giving up control. It's people that already have 20, 30 contractors, right? At $3,000 a month, like you want to be their lowest paid contractor at $3,000 a month. It's very simple, right? If you're the lowest paid one, of course you're going to be able to go. I don't know any creative was. Sorry, I just got a message from someone. Got a little distracted, but yeah, man, like it's really about, this game is really also, in addition to like pattern recognition, it's just about like knowing who do you spend your time with versus like who do you not spend your time with. And then once you really get a understanding of that, then life is very, very consistent. Boom. And that's the key thing, man. So next thing is really, actually hit the next point, contracts versus employees. Like, it should be normal. Like, you never want to be someone's first. Like, you never be someone's first. Next thing, you have to start going to them, okay? So I told you where they are. They're all over the place. You just have to be able to identify who are the right ones. Now, in some future podcasts, this podcast is going to be like a little bit longer. I don't want to go super, super long. So I think probably the next one or like maybe the one afterwards, we'll just like break down more about that. Also, you should see some of our other podcast episodes where I break down client result or student results. So every time a mentorship student has like a testimonial or whatever, I'm actually starting to break those down and tell you exactly what they did, so you can actually go and copy that for yourself as well. So go and watch that video inside the podcast series. One podcast I'd probably recommend is Megan J, how she went and got 3 clients in 7 days. That's a pretty good podcast. Next thing, okay, rookie mistake of the episode. Branding, not direct response. So a lot of people when they first get started, they're doing a lot of stuff that is good for branding. They're not good at doing stuff that directly goes and gets clients. So what I mean by that, so they build a website, the brochure, it's the posting of content. Now, the reason why that's not great when you're starting out is because you have no one that's going to see it. A lot of times, and this comes, I'll just give you a history lesson, most business owners or like SBDC or like entrepreneurial organizations are going to give you the advice of branding, website, brochures before you get started, because back in the day, if you started a business, you'd almost immediately get clients or you'd have to go place in bids. So, for example, one of our family friends when I first got started, she owned like this laser company, right? And it was a really successful company. But when we started, she advised us to go and get like the brochures and the website. The reason why is because like when she started a laser company, as soon as you get the technology and you get the equipment, there's only really a few competitors that you're dealing with, right, for the contract. So you're going directly to the people, and if you don't have the stuff in place, they literally cannot I think it's like by law, they can't actually let you like do business with them. So they have to get that, and they have to get that stuff there in order to even be legitimate enough to actually take on a contract. Versus for us, when we get things set up and established, nobody sees it. So we could go a year. If you just have your website, you can go a whole like year, 2 years, 3 years without ever getting a single inquiry. So it's a totally different business model today than what it was for most of those traditional businesses, right? So you always have to kind of take your advice based on like what is the right thing for the type of business model that you're actually going for and what stage of business are you in. So for example, if you're already doing like 15, 20 grand a month, I would tell you like you would grow your business differently to someone who's just getting started. At 15, 20 grand a month, I'd probably advise for you to either start looking at buying clients or advertising. You need to like learn how to utilize the money you have to start buying more clients. Before that, you need to learn how to use like their time, automations, or people. Generally, it's gonna be time and automations, right? Like automated ways to use Facebook, automated ways to use LinkedIn to start getting clients and start bringing the money. But there's gonna come a time where you have so much money that you won't really know what to do with it. And the best way to use it is to go and use that money to get more money, right? So it's all about the piece of advice that you're at the time that you're using it, right? So I would not be thinking of branding. I'd be thinking about directly going to clients. It's called direct response. So that's using your messaging, right? That's like texting people. That's using LinkedIn to go build relationships. I call it building relationships. Really what it is like learning how to message people to get them to want to work with you. And you're using automated systems to be able to go thin the herd so you don't have to do that much actual work yourself. You're just responding to messages of people that are interested in your service, right? So when you're starting, again, we're going direct to people, we're messaging, we're building relationships with people that are going to give me a yes or no response, okay? And then I'm not going to be making content. I'm not thinking about the website. I'm not thinking about anything, okay? I'm just, do you have my money? Do you have my money? Do you have money to pay me today for this service? If you do, let's go. If not, okay, I'll just move on to the next person. That's all for like the first 14 months in business, that's all I thought about. As soon as my income started going up like this, it was when I started focusing on this and not posting content. I stopped posting content. Like you wouldn't even know I existed if I didn't message you. Like, but that's the point. And then, so that's what to start with, right? Direct response. There will come a time to when like posting makes sense, right? Like if you look at me now, like I'm posting, right? This is technically a post. It's a podcast, but you know, it's because I'm at a certain point to where I don't necessarily need money tomorrow. I don't mind someone watching my podcast today and then working with me like 2 months, 6 months, a year from now, right? The name of the game is not necessarily speed for me, it's certainty for me, right? So I like giving away free information so you guys give me referrals. Some of you might end up working with like our mentorship program, or maybe you just absorb free information forever. I don't know. Doesn't really matter, you know what I mean? But that's the difference. You can switch towards branding related stuff when you no longer need money. And when you have an audience large enough to actually capitalize on that money. Now, if you're watching this podcast, you might say something like, Bryce, at this current time of shooting, like we just started this podcast, we have 45 subscribers on this podcast channel, right? Like, because we're launching on like YouTube. It's kind of like a weird thing. It's like a podcast. We have a video version of the podcast as well as an audio version of the podcast. But the video version has 45 subscribers. Like, Bryce, that's not a large audience. Yes, but technically I'm tapping into YouTube's audience. So I'm probably, by the end of like the next like month, and this month alone, in terms of like impressions for the podcast, we got like 10,000 impressions, right? With 45 subscribers. So I understand how to use the social media platform to expand my conversion circle. Going back to the conversion circle we talked about earlier, I can expand it very rapidly and I can build a relationship with those people, but I'm using more of my words than doing like messaging to get people to kind of move. Right? So that's when you switch. And the next thing, the last thing for today's episode is going to be business lessons. Learning how to pick up the sure money without trying to get super rich. So what I've kind of found is anytime that I try and like get rich, I overextend myself and I become very, very unprofitable because I'm trying to force things. Versus when I'm looking at like the sure sources of money, when I can pick up an extra $20,000, $40,000, $50,000 per year off of the activity, that's the activity you do, right? Because at the end of the day, it's not just about getting high revenue. It's also about the profit margin, right? And really having a plan for your money and knowing like what to do with it once you start like getting it. That's the biggest things. Like, cause like if you don't know what you're gonna do with it, you don't really know how to utilize the money you have, you just end up just paying a lot in taxes. You end up like spending a huge amount of like random business expenses, and your business just not as efficient as like what it could be. Right? So it's all about just really understanding kind of that spot in life. And just remember this too, because like there's going to come a time in your life to where like you might see like different ads online. They're like, you could be rich, you can make like $20 million tomorrow, right? And that can happen for some people, but in a lot of cases you're better off just getting to like 150, 200, 300K per year and just like living a pretty like reasonable life. Like, because you can, if you're making, let's say you're making like 200 a year, 250, you can get a nice car, you can upgrade your house, you can take those vacations, especially if your business is not very like it doesn't have huge expenses. So it's like you need a lot less money than what you think in order to really live the life that you want. And when you think in terms of slow, steady, and consistently hitting your number goals of hitting that 150, 200, 250 per year, that's when your wealth starts to build. That's when you can truly not just get that life one time, but you stay in that life, right? It's like, for me, I was very blessed because I was able to kind of get out of that like want to get rich trap very, very quickly. So, and this has always been like one thing I'm always like kind of like upset about or nervous, or not nervous, but upset or annoyed about, right? Is like rich versus wealth, right? I have a lot of wealth, and wealth is generally measured in time. It's like money versus time. Like, how long could you stop working and still be good, right? I can stop working for a long time, so I have wealth, but it's not necessarily in the form of like of liquid riches where I can just drop $1 million on one thing like tomorrow. Like, I mean, even if I could, I don't know if I'd want to do that. Because then I have to like work a lot more. Like, because there's a lot of people that like make a lot more money than me, but they have to work way harder. And not only do they have to work way harder, they cannot retire. Like, the amount of people that make like anywhere between like $600 to $1 million per year but can't retire because they're like paycheck to paycheck would blow your mind. The only reason I know this because, like, you know, when you're working with an accounting firm, you're seeing people's finances, you're having these conversations with them, you're thinking about like the future for their business and for their life, right? And it's just like you just be so surprised. So the main thing is like just learn how to, every time that there's an opportunity, there's a perceived opportunity and there's a sure pick. So for example, one sure pick that I started learning about when I first got started was investing in myself. So some people would like go and like let's say you had like $5,000, right? Would you rather invest that in the lottery, or would you rather invest that same $5,000 in yourself, like your skill set, your mentality, your ability to go and grow a business? A lot of people who are unsuccessful would go buy, let's say that each lottery ticket costs $10. They would go buy 500 lottery tickets, right? In a lot of cases, like maybe one or two of them might win like $1 or so, but they just basically just spent $5,000 and nothing came out of it, right? Versus the people that invest in themselves, they always get a return on that because now you've increased your earning capacity, right? So you went from a person like maybe in your business, like if you didn't invest in anything, like you could maybe probably only like make like 10 grand a year, right? But you start investing, okay, so you spent the 5 and now you've increased your earning capacity to be able to go and get to like $50,000, $60,000, $100,000 per year. But now you have $100,000 per year for like the rest of your career. Like that's your minimum kind of baseline threshold because you have that skill set, right? So it's like now if you just have your career, let's say your career is 20 years, $100,000 per year times 20, what is that? It's about $2 million per year that you would have gotten. And generally in this business model of accounting and bookkeeping, that's almost entirely profit. Now, you know, your tax bracket might be a little higher, you know? Just kind of depends. Like if you went straight 100K, no business expenses, you know, your tax bracket, you have to go take a lot of the business trips. And like, I'm not giving like tax advice on this video because I don't know your situation, but you know, it's one of those things. Like if you just do the thing that's certain, and if you invest in that long enough, you're going to get better because you won't just stay at $100,000 a year, right? You're going to keep reinvesting in yourself. You're going to keep getting more and more. So that 100,000 turns to 200,000 a year, which turns into $300,000 per year. And then you can kind of like debate if you want to keep pushing or if you just want to sit at 300K per year. It's kind of up to you and your lifestyle goals. But then if you just multiply it out, right? Let's say 10 years at $300,000, right? That's going to be $3 million. Okay, so now you actually got to your goal, your $2 million, 10 years faster. And just keep investing in yourself until you hit whatever income goal you want, right? And that's really the big thing that I've kind of like learned. I'm always kind of like coming to grips with that because it's like I always want to be like one of those people where it's like, you know, you see him kind of like in the Lamborghini or the Ferrari kind of thing. But it wasn't until I got my Mercedes and my BMW that I was like, the cars are cool, but it's like it's not exactly what you think it is, right? If you're doing it to like impress people, it kind of impresses people, but it kind of doesn't impress people. It's kind of a weird like neutrality thing where it's like the people that are impressed with it, they're only impressed with like one time. After they've kind of seen it one time, it's like, oh, that's just his car. You know what I mean? So it's like it's not that big of a deal. And also, it becomes such a hassle. I have a Nissan as well, like a Nissan Sentra. So I have a Mercedes, I have a BMW, I have a Nissan Sentra, right? And the Sentra, and even before that, I used to have like a Camry. I used to love that Camry because I could just get in and it could be like, I didn't have to worry about it. If I hit a speed bump, I didn't care. Like it was so easy. But when you start getting like nicer and nicer stuff, you have to take care of it now. And it's just like, it becomes like just a way more of a headache, like the more nice things that you have. So it's like really understanding like that balance between like, you know, money, material possessions, and then just kind of like, you know, understanding. Because like in a lot of cases, like I'd rather like spend it like traveling and stuff than just going like buying a Ferrari. So for me, I like investing, I like traveling, I also like relaxation. So I used to get a lot more massage. I don't anymore because it's just kind of a waste of time, in my opinion. They just take too much time. Like it's an hour there. It's like 30 minutes driving because I have to go 15 minutes there, 15 minutes back. That's my longest commute. Outside of dance, like my dance class and stuff, my longest commute is like 15 minutes, right, to the massage place, back and forth. So that's too much time for me. You know. But that's kind of the business lessons. Hopefully you learned something new from this video. Also, yeah, if you want, go check out like some of the links inside the description. There's a lot of different resources we have available to you to help you grow your business. Also, please share this podcast with someone who you feel it could benefit, who wants to grow their business, and who's maybe trying to start an accounting and bookkeeping business, but just doesn't know quite what to do. Just send them this podcast. It could be a resource. If you care about them, send it to them, okay? Talk to you guys inside the next video. Take it easy.